Welcome in this video. When is Xcn coin big wave coming? We will analyze it. Don't forget to subscribe, like, and please watch till the end to understand. One of the most striking structures on the chart is that the price is clearly moving within a well-defined ascending channel. These types of channels are extremely valuable in technical analysis, as they provide important clues about the direction of the price. In the current setup, it is clearly observed that the price action has approached the lower boundary of the channel and found support there. Technically, this can present a strong opportunity, as prices within ascending channels tend to move upward again after testing the lower band. The lower band often marks the starting point of a new upward move as buyers step in. In this context, the current structure is giving quite positive signals. If the price, which has touched the lower line of the channel, finds buyers at this level, it could make a strong bounce. Such reactions may first target the midline of the channel and then potentially continue toward the upper boundary. This rhythmic movement within the channel offers meaningful opportunities for both technical traders and medium-term investors. Candlestick patterns forming around these lower band levels can be early indicators of a reversal. Patterns like pin bars, dojis, or bullish engulfing candles signal that buy signals are becoming clearer. Moreover, ascending channels indicate that the overall market structure remains bullish and that buyers continue to show strength. The fact that the price has pulled back to the lower band is part of the natural fluctuation within the channel. This pullback should not be seen as a sign of weakness, but rather as a healthy progression of the trend. Even strong uptrends undergo corrections from time to time, and these often end at support zones, allowing the price to regain strength. The current price action reaching the lower band should be evaluated in this light. Another important element to consider is the upward slope of the channel. This slope shows that the general direction of the market remains positive and that upward momentum is continuing. These types of structures are commonly seen during strong trend periods, with price oscillating within the channel. Currently, the price near the lower band is also trading close to previous support levels, suggesting this could be a technically strong reversal point. Volume data may also provide important clues that the price is finding support at this level. An increase in volume as the price touches the lower band may indicate that buyers are stepping back into the market. This suggests that the upward reaction is supported not just technically but also psychologically. It's known that investors tend to buy at these levels based on past experience, as the lower band has been tested multiple times before, each time resulting in an upward bounce. This increases confidence in the region and strengthens the technical signals. If the price reacts from this support zone, the first target is usually the midline of the channel. Midlines are areas where the price temporarily pauses, gathers strength, and determines the direction of the next move. This band can be tracked as a short-term target, and the technical structure formed here can give investors insight into whether the price will continue toward the upper boundary of the channel. If momentum is strong, the price may easily break through the midline and progress to the upper limit, especially if supported by positive news flow or general market optimism. The upward movement can gain additional momentum. For investors following a trend-based strategy, this structure is extremely valuable. Buying within ascending channels often offers a low-risk, high-reward ratio. When the lower band is used as the entry point and the midline or upper band as the target, the stop-loss level can be limited based on a potential break below the channel. This increases the safety of the positions and helps keep risk to a minimum. But we can't base our analysis solely on the channel. Let's take a look at other metrics as well. Stay tuned. In the technical analysis performed on the chart, applying a Fibonacci retracement tool from the previous low point to the recent high reveals some highly noteworthy levels. These levels are frequently used by professional investors to identify potential zones where the price may react. Because Fibonacci levels reflect the psychological and structural dynamics of the market, they are tools that must always be taken seriously in technical analysis. In the current outlook, attention is focused on the 0.786 level among the Fibonacci retracement levels as the price continues to pull back. This level often comes into play during deep corrections and is one of the areas where the market can show a strong reaction. In other words, if the price retraces to this level, there is a high probability that significant buying interest may emerge, potentially initiating an upward movement. The 0.786 Fibonacci level in technical analysis indicates that even though the market has nearly erased the previous upward move during the correction, there is still a chance for recovery. Buying activity from this level is often strong because smart investors recognize it as a potential bottoming zone. Therefore, the pullback to this level should not be viewed as panic or collapse, but rather as a healthy correction and a setup for recovery. When evaluating the current technical structure, it is quite reasonable to assume that the price is approaching or may reach the 0,786 level. The reaction at this point will be critical. If buyers step in strongly at this level, it could mark not just a short-term bounce, but also the beginning of a new trend. Especially if this reaction is accompanied by a rise in volume, the likelihood of a strong rally increases. Moreover, the price reaching the 0,786 level also means it is nearing the cheapest zone. These areas are often where institutional investors begin to take positions. Therefore, a rise that starts from this level may gain momentum, not only from retail traders, but also from large funds and whales stepping in to drive the price higher. In this scenario, it is possible for the price to reach new highs, target previous peaks, and form a new trend structure. Additionally, momentum indicators such as the Relative Strength Index, RSI, are likely to be in the oversold region around these levels. This technically indicates that the downside potential is diminishing and that conditions for a possible upward reversal are beginning to form. These types of signals provide extra confirmation for investors and add confidence to the decision-making process, especially if after reaching this region, the price moves sideways for a few days and then forms a bullish candlestick. Such a move is considered a strong buy signal in technical analysis. Furthermore, this level represents an important area where the price may complete its technical bottoming process, trend breakouts may occur, and renewed investor interest may emerge. In addition to technical analysis, any news flow or macroeconomic data released around this level can also significantly impact the price direction. Therefore, this zone should be closely monitored not only from a technical perspective, but also from a fundamental analysis standpoint. In conclusion, the 0,786 level, one of the Fibonacci retracement levels, stands out as a highly valuable area in technical analysis. A pullback to this level may indicate the end of a potential decline and the beginning of a new upward trend. In the technical outlook that we carefully observe in the chart, it is noticeable that the price movements have reached a very critical level. The 200-day exponential moving average level, which is closely followed especially by long-term traders and major market participants, currently serves as an important threshold for the price. This level is one of the key indicators often used in technical analysis to confirm the existence or change of a trend. As such, price approaching or testing the 200 EMA should always be watched carefully. Looking at the current market outlook, price touched the 200 EMA and experienced a slight pullback from there. While this may be perceived as a short-term weakness at first glance, it can also be interpreted as a very healthy correction in terms of technical analysis. This is because it is common for strong rallies to pause briefly at certain resistance levels, gather momentum, and then continue with larger moves. The 200 EMA is like a mirror of the long-term trend, as it follows the average movement of prices more precisely. If the price stays above this level or manages to break it strongly, this is a clear technical signal that the uptrend is confirmed. The 200 EMA shows long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.